Okay, hello and welcome to the first webcast in the MSDynamicsWorld.com Fall Professional Services Series. I'm Jason Gumpert from MSDynamicsWorld.com, and we are really happy to have with us, well, first of all, we're really happy to have with us all of you, and our presenter for today is Jack Boyer, as well as some members of his team from Boyer & Associates, a Minneapolis-based Dynamics ERP partner, and Jack is also a real specialist in the needs of professional services organizations. You might also know Jack from his blogging. He's an active blogger. He's also a contributor to our site, where he's done some great writing about Dynamics ERP products, professional services, and other best practices as well. So welcome, and we are really also happy to have you here for your feedback and for your ability to ask questions today throughout Jack's presentation. There are a couple ways to do this. You can use the Q&A tab that you will see on the during the webcast, and you can also feel free to tweet your questions or your thoughts. We're using the hashtag MSDWSVCS, MSDW Services, to take questions. We'll be sure to leave time at the end for Jack to answer as many as he can. So without further delay, please allow me to turn this over to Jack Boyer. Jack, are you there?
Hey, thanks very much, Jason. Hey, we're delighted to be invited to do this, and we've got two demos for you. One will be Dynamics GP, and that will be done by Ron Pedersen here, and I will be showing the Dynamics FL program. And so we're assuming that there's probably a lot more partners and users of Dynamics GP, and so Ron will go a little longer than I will, and we'll also do Dynamics GP first. So our business has been in business about 18 years. We have close to 300 Dynamics FL clients and well over 100 GP clients. I'm a CPA and I'm an MCP on SQL Server. And Ron Pedersen is a CPA, worked for public accounting firms for 10 years, and has been a Dynamics GP expert for the last 15. So we're going to start with GP, and I'll hand it over here to Ron.
Hi. So we're going to be talking about Dynamics GP first, as Jack had mentioned. And when it comes to revenue and expense matching, there's several modules that you can use within Dynamics GP. And keep in mind, when you're thinking about revenue and expense matching, it also includes being able to get your revenue and expenses into the correct periods. One of the first modules we'll be looking at and taking a bit of a deep dive into is revenue and expense deferrals. You'll see as we go through it that the setup is easy, and it's good for deferring some of your revenue and expenses, and we'll take a look at a couple of examples there. Also, within Dynamics GP, there's a contract management module, and that is part of the field service suite of modules. This is good for all sorts of service type contracts where you can define various contracts, and also for using multiple revenue recognition types that are associated with contract management. In project accounting, which is good for more complex projects, you have the ability to define multiple project types, and associated with those project types, multiple types of accounting methods for recognizing your revenue and expenses. Let's get right into the demonstrations. So what I'll start with, first of all, is a very simple example to get ourselves started, and something that's very common with most organizations. Let's say you need to, you're recording a insurance expense payment, and this expense payment is maybe an annual expense. What most companies are currently doing is they're getting into their AP and they're going through, and we'll do a quick one here. I'll abbreviate insurance expense, and I'll put it into a deferral batch. I'll just call it that. And then I'll select my associated insurance company here, give it a document number, and we'll just select an annual fee for that. So as most companies will do, is they'll go through, maybe they'll record this to like a prepaid insurance company, a prepaid insurance account that might be sitting on your balance sheet, and then what they have the habit of doing is doing recurring journal entries to spread that out through for each of the months. But then they got to remember to go into the general ledger, set up those recurring batches, and record those journal entries. But with the deferral setup, once it's set up, you will, the module under additional, you're able to take this amount and make that deferral right from here. So we have this option of deferral under the setup where we can come in and say, what's the starting period for it? I'm in a demo company, it's set to 2017, so that's why it's defaulting there. But if we're doing this for a year's time, I could either use my calendar or put in a future date here of being out 1 year out. So we're taking it 1 year out, and then we can say, what is the method that we want to defer this? We can say equal amounts per period, or days within a period, or some other miscellaneous spread. I'll leave it as equal amounts per period at this point. And then it's saying, okay, this is my deferral account of the prepaid insurance. What account do I want to recognize those costs in on my P&L? And let's see, what do I have this set up as? I think I've got a liability insurance expense account here. So what this is doing, based upon the parameters I've set up, it's ready to take and defer this expense, equal amounts per period, into this liability insurance. And you can it's showing you down here how it's doing that calculation for each one of the periods. And you'll see that it immediately changes if I go to days per period. Now it's calculating and spreading that by the remaining days in this month, and then how many days are in each of the future periods going forward. So it does all that math and calculations for you. But I'll leave this here. I'll go ahead and say OK. We'll save that change. It's now part of this transaction. And if I save this transaction into this batch, and if we were to go in and take a look at that transaction, it's showing us both a standard edit list that will come up, and now we're also going to get a deferral ledger edit list, and we'll take a look at that one also. So this is the same payables transaction edit list that you're used to seeing. We've got the 12,000 coming into associated here, and it's all being posted at this point to our prepaid insurance. But the next report will tell us that it's going to take that and automatically spread that. So it's going to take, for each one of those periods that we've identified, it's going to be reducing our prepaid liability, reducing our prepaid amount, and recording the expense on our P&L in equal amounts throughout our 12 periods. And it can do this and post into those future payments, so it's going to do it all right now, as opposed to the way people have become accustomed to doing it, of recording these recurring journal entries and having to post those one at a time into the future. It will also post these, if you have the setup done correctly, into closed periods. So we'll override that and we'll post it into those future periods for you. And we'll take a look at the setup here briefly. So I'll close this down here, and we'll leave this up a moment. And we'll go back over to into the financial area. It's under the financial area where we have the setup for this module. So under the deferral area is where we can kind of specify what the audit trail codes are going to be, what the next document numbers will be, what the default calculation methods is, whether you want it to auto-post into those future GL periods or not. And then we've got some also settings here that I'll be talking about in a minute. But the purchasing series, we said, let's use a balance sheet type method. In a moment, we're going to talk about the P&L method also. And you can also specify warning messages and stuff also. So, very easy to kind of enter those transactions, but they've also made it even easier to create and control those transactions with deferral profiles. If we click on the deferral profiles, I can pull one up and you can create your own, as many as you'd like. Here's one for an insurance payment. So we're saying that for this profile, you name it, the deferral is going to be posted to, like prepaid insurance. We want to recognize the costs, in this case, to this particular account. It's going to be handled in the payables management module, and the distribution type that we're going to look at when we're on that transaction is going to be a purchasing line. Then we can also go in here and say what is that calculation method that we want it to default to, and how many periods we want that to do. So it's going to pre-populate all this information. You can also grant access to this profile to just certain users with this screen and allow them to override, or you choose what you want them to override. So if you really want to lock it down, if they choose that profile, they wouldn't be able to choose the number of periods or the calculation method or any of the accounts, or you can allow for multiple overrides. Let's see, in this one, for the user ID of SA, I'm allowing for most of the things to be changed except for the calculation method and number of periods. Now, if I go back and we can kind of use this profile, we'll go back to our purchasing side here again and bring up maybe that last transaction. Distributions, when I'm on that line, if I come under distribution profile, okay, I'd already made my entry there, so maybe I'll have to do one more. And I'm on my prepaid deferral line here, my profile. Oh, maybe I didn't save that. I was granting myself access. But in essence, all this information would default in at that point. I think we'll see it on the sales side coming in also. So that makes it just that much faster to be able to create those deferrals. Now, for those companies that are frequently using these types of deferrals, and particularly on the sales side, you might say, and you might be a little bit ahead of me in this thought process of saying, well, that works out pretty well on an expense side to be able to just grab and move those expenses across. But if from a sales side, if we've made a big sale that's going to need to be deferred over the several months or over a year, I know our management team on our P&L is going to want to see that big sale came through, even though, so I don't want to bury it on the balance sheet and only bring in, let's say 1/12 of the amount. Well, the profiles will allow you to do that if we select it and have the setup going on with the other method of deferrals. So in this case, we said for the sales series, let's use a profit and loss method as opposed to the balance sheet. The balance sheet says, hey, we're going to just post it there and then take it into the P&L over time. On the profit and loss method, we are able to post that full transaction to the P&L, but then provide for a number of additional accounts to be able to allocate that. So let's take a look at one of those other profiles. Under software maintenance, so this is going to be associated with sales order processing. So the scenario in this case may be, maybe you're selling a software maintenance contract of a year's time and you want to be able to defer that over the time. So now you can see the setup screen for this is we have several more accounts, and you can use all these accounts, or you can use, they can all be different accounts, or you can use similar accounts or the same for some of these options. But let's walk through all the steps here. So if you're booking this software sale, the original billing or revenue or sales account can go to an account like this, software maintenance agreements, on your P&L. So if it's, and again, my example of $24,000 for maybe a software maintenance agreement, that whole amount can go in there as the credit. Then we're going to debit a deferred maintenance agreements account. So we'd take that whole $24,000 again back out, but we'd post it into a different account, so you're still able to see the full tracks within your P&L there for that, the recording of that initial sale. And then as we pull it out of this account, we're putting it onto the balance sheet into a deferred revenue account. So we've got a liability for it. We still need to perform some services in the future, so it's going into our deferred revenue account. And then as it sits in there, so we've got the $24,000 sitting here, and if it's $2,000 a month, so we're going to equally spread that out per month. We can then choose yet another account as an offset to our deferred revenue, so we can see how much the full deferred revenue is and how much we've deferred so far, or these can be the same accounts. So the $2,000 would come out of here with a debit, and the credit could then move it over back onto the P&L into a deferred revenue recognized account. So again, the $24,000 gets on the P&L, gets backed off, moved to your balance sheet. Now it's time to start recognizing the revenue month by month, period by period, and that's going to come through a deferral transfer account and back onto the P&L. And then we can specify also that we want to use this profile in sales order processing. What's the distribution type we're going to do this for the dollar amount, and the type of calculation method, and the number of periods. And I think I've already granted myself access to that, so let's hope that this one works smoothly for us. So sales transaction entry, let's go in here, let's see, and do I have one set up for this? Nope, I don't. Okay. So we'll go ahead and we'll do an invoice here. Go to Adam Park, and we'll come through. We'll put it in a batch of deferral here, and software maintenance. There's your software maintenance, and we're going to do it for the $24,000. Now, when we go to take a look at our distributions, our sales account is going to that software maintenance agreement. So we're going to recognize and see this all on our P&L. But the profile that we're going to use to defer that is that software maintenance one. It defaults right in. It's defaulted for us our calculation method, our start date, the number of periods, and all the accounts we want to use for this calculation. We can then go ahead and say allocate. And by the way, as you set up this profile, we can remember choose each one of these in terms of what we want to show as or allow the person to change or edit as they're entering it. So some of these could be grayed out, and you choose that. So I'll go ahead and hit my allocation there, and that is now saved. And we'll save that in here. Go take a look at our one entry associated with this, and we'll do an edit list. Our standard edit list will come through, and a deferral edit list. This being our standard one that you're used to seeing with GP, and it's showing that it's all being posted to the standard distribution accounts. And then on here, it's showing that it's taking it, it's grabbing that amount that's on the P&L, that's moving it into deferred income, and then for each of the periods going forward, it's also posting all of our deferrals the way we had set that up. So using those deferral profiles makes it very easy. It allows you to control how those accounts will be set up. Setup is relatively easy there. And now sometimes people also will come up with the question of, like, what happens if we've posted the transaction, someone forgot to go in and select that deferral profile. You've got retroactive deferrals that can be done both in the purchasing side and the sales side, where you can go pull up a transaction that's already been posted, select the deferral that you want to do, and it will post and do the extra transactions for you. So that can happen both in the GL side, the sales side, or the purchasing side. There's also some nice reporting that is provided with the module. And I go down here, and here it is, deferrals. And I've got a little one set up just to look at the one software maintenance type of agreement, so you can kind of restrict it to customers or other ranges. Let's go ahead and run this report. So when it gets all posted through, you can run it and be able to see how much was originally posted and what those dollar amounts are, and if there's anything further that needs to be posted. So you can get the history of that, and also with these deferral reports. So very, very nice kind of reporting also. So easy setup, easy to be able to handle those deferrals on both the expense side and the sales side. So a little bit more of a deep dive there. So we did also mention that there's a couple of other modules that can be able to handle some of the revenue and expense things, and one of those is part of that field service area under contract administration. With this module, it's very nice to be, or easy to set up, here we go, be able to set up some service type contracts, and it's quite powerful. It allows you to establish what the period is of that contract. It also separately allows you to set up what the billing is going to be associated with it. So if you've got, instead of billing just once, you could be doing quarterly billing or semi-annual or annual recurring billing. So the billing sequence is separate from the contract setup, and then you also have a liability type down here, which helps to define how you're going to recognize that revenue. It's already been established for this one. It's already cleared out. But if I were to come down here to the liability types, you can see you've got several types, like, for example, the straight line. Just allocate that revenue out over a straight line type method, or block time. If you're selling block time type of agreements, let's say 20 hours with that's worth a certain rate, $12,000, and if you've billed so far 9 of those hours, it's going to take that portion and recognize that much revenue. You also have a retainage type thing. If you are selling them $3,000 worth of services for for $2,400, a discounted type rate, and you've now provided $900 worth of services, it's going to take that proportion and recognize that as the revenue and the costs. Based upon calls, you could also do a contract that says, oh, we're going to provide them 10 calls for $2,400. If you've now done 3 calls, it's going to take that portion of the revenue and recognize it. And on the last one here, metered, you can set up metered based upon whatever your units are, be it hours, be it kilowatts, be it whatever you're trying to measure and meter for that, and it will take the portion of that contract to recognize that also. There's a lot more associated with, of course, the field service and the contract maintenance. We don't have time to dive deeply into that, but let's talk briefly also about project accounting. So under project accounting, under the contract setup here, if I were to grab one of these, nope, don't have one there. Go grab one of the first ones. When you're setting up projects, which can be used for handling much more complex type projects, you have a couple of different settings you can do here. You can come under the project type and set it up as a time and materials type of project, or a cost plus project, or a fixed price project. Once you define the project type, you're then also able to come down and select different types of accounting methods for that project. A when performed project type would be the type of a time and materials, and you would be recognizing your revenue at the time that you're recognizing some of the costs that are being incurred. When billed is another time and materials type of project, and with that type of revenue recognition, you're recognizing the costs at the time that you're actually billing for the project, billing the revenue. Cost to cost type of method is it's either going to be a cost plus or a fixed price type contract, and here you're kind of looking at your actual costs as a percentage of your total forecasted costs. Effort expended type is another either cost plus or fixed price type of contract, and here you're looking at actual quantities that you have incurred over a total forecasted quantity. And the same with effort expended labor, in this case you're only looking at your labor that's being expended. Completed contract is another cost plus or fixed price type contract, and here you're looking at the project status of the contract. You're not recognizing any revenue until you've marked the status of the contract completed, and then you pick up all your revenue at that point. In all these cases, they're all looking at your various cost categories individually, and it will treat each line separately when you're kind of looking at the total forecasted amounts. If you want to look at all of them in total as you do the contract, you can then mark the combined for your total revenue recognition. So again, that's just a project accounting revenue recognition in a thimbleful of information there, but with the time constraints that we have, it's at least a little bit of an introduction to you for that type. Jack, I think you were going to do show some stuff associated with Dynamics SL now too.
Yes. So we've got 2 virtual images running on this machine. So we're going to not save the state on this one, and what we'll do is we'll start the Dynamics SL image, but what we'll do is just a couple of slides while we're waiting for that image to come up. Those of you that work with virtual images are probably aware that the environment is very slow if you don't have it up and running. We did get the Dynamics GP image up and running nicely, and it had been up for a while. So you can see that we're saving this image, and we'll get the Dynamics SL one started. Saved it, which helps it to boot up a little more quickly. And so our next slide here, talking about Dynamics SL, what we'll be showing is percent complete. And what you can do is you can enter the percent complete manually. You know, say we believe we're 50% done, we're 75% done, and the software will compute the percent, or will actually make the entries for you. Or you can allow the percent complete be computed based on what either the contract value, you know, if it's, say it's fixed fee, for example, it's $100,000, it can be based on the contract value or the estimated completion. So if you've got some change orders or some additional scope that's been added, it will compute that based on the EAC, or estimated complete. You can also do your revenue recognition by the project or by the task. I know in our business we do a lot of data conversion for people before they convert to Dynamics GP or Dynamics SL, and that's something that's very difficult to estimate. So we'll have maximums, for example, of $20,000 for data conversion, or a limit like that. But then also, if it goes over, we don't want to say, hey, we're 99% finished with this project and recognize all that revenue when we're really we just went over a little bit on one task that we can't recognize more revenue for. So it helps us limit the revenue recognition accordingly, the way we want it to. And then completed contracts, what you'll see there is it does the same computations, except that the revenue goes to a deferred revenue account, kind of like what Ron just showed you, where you're deferring the costs and the revenues until the end. So I've got 2 more slides, and there's also a cost plus, right? If you're in the Washington, D.C. area, you're probably interested in a cost plus area because the government allows you or forces you to do your billing that way. So what this does is if you've accrued $100 in costs and you have an 8% fee, it'll calculate your revenue as $108. So percent complete maintenance, this can be done at the project or the task level also. We did have one large client that was providing heat recovery systems, and they were doing this in all kinds of foreign countries, especially in Pakistan before the bin Laden thing happened. And what they were doing is they had so many materials on the project that they didn't want to do revenue recognition by the cost of the materials or the delivery of the materials, because they knew that the labor was really what drove how complete they were on the project. So we created a customization for that, and it worked great. But then Dynamics SL with version 7 came out, and it had that feature in there where you could just recognize the revenue by the number of hours or by the number of dollars for labor that had been accrued so far. So you'll see that, some project maximums and how we can limit that. And then there's also revenue schedules that you can set up. So if you know pretty much how you're going to recognize this revenue ahead of time, you can set that up for a year, 3 years, 5 years, and just have a scheduled bill go out. And the scheduled bill doesn't have to agree with the scheduled revenue recognition either. So I did set up a hospital for you to see how that might work. You might want to recognize a third and a third and a third, but have it billed 20, 40, 40, or vice versa. So you'll see that example. And then the other nice thing is Dynamics SL allows you to copy and paste revenue from a spreadsheet. A lot of people like to do their revenue recognition in spreadsheets, and maybe it's so unique that one of the many methods we have here doesn't work well. And because Dynamics SL works in grids, you can take that grid from Dynamics SL and paste it right into the journal transaction screen, which will also be prompting for projects and tasks. So you'll see that example also. And then part of the agenda was analyzing project groups. So one of the things that a lot of people are interested in is looking at projects not only by this particular project, was it profitable, but this group of projects. Maybe you've got government jobs versus non-government jobs, or you build wooden bridges and steel bridges, and you want to see which groups are more lucrative, generally speaking. So you'll see that in an analyzer module as well. And for those of you that are in the software business, there's a software product that we've recommended and implemented for clients called MaxQ's Recurring Billing. And I do have the link here if anybody wants it. And you can certainly email me if you'd like that. My email is jboyer@boyerasssoc.com if you can't get that whole link copied in. So wanted to share that with you. And hopefully our image is up now. And we'll get out of PowerPoint. And we've got Dynamics SL up and running now. So if we take a look at the project maintenance screen, what we'll do is we'll bring up that hospital, and what they're doing is they want to promote the new opening, and so they've got some marketing elements to this hospital. But what we wanted to focus on was the revenue recognition type. So here we've got percent complete, completed contract, or the fee base, and that's cost plus a fee. And none would be something more like time and materials. So you're really not recognizing revenue until you bill it. So that would be, it's not really none, but kind of other. So if we stick with that, you can see the other contract types we might have. We've got cost plus, moving to WIP, cost plus, moving to revenue, time and materials, a number of ways to allocate that. The other nice thing about this software, Dynamics SL, is it does allow you to do that analysis for which projects are most profitable. You can do that by, say, project manager or business manager. Maybe the business manager is the estimator. And when you do an estimate for, when Fred Northrup does an estimate, no matter who's managing that project, you tend to make money. You can pull that out with the analyzer, or regardless of who estimates it, if Tracy Tallman is the PM, well, it looks like it's going to end up in a good way, because Tracy's good at getting change orders and managing expectations and bringing the project to a successful conclusion. So one of the things I wanted to show you is the revenue recognition setup to discuss some of the things we just talked about. So we've got this list of projects, and if we stick with the one that we have, we've got percent complete like this, but you can see that this can be done at the task level too. So we might have a time and materials project, but an element of it that's fixed fee, or vice versa. So the software will let you do that by project or by task. If we select by task, it'll allow us to use that part of the GL sub-account or account string for revenue postings. So we can do that for a project or by task. And then if we want to tell the software what percent complete we are, hey, we know the PM says we're halfway done, we can type in 50% and then have the software compute what the revenue is right here. Or if it's a fee-based arrangement, if it's a cost plus type thing, we can type in that 8%, and that's where that example of we've incurred $100 in costs, but our revenue is going to be $108 based on that 8% markup. So the other nice thing about the fee base is if revenue has been recognized already, it backs that out and only gives you the incremental revenue recognition. So then you can see that it can be based on units, such as hours or piecemeal type things, or it can be based on dollars. So for the group that does the gas turbines and the heat recovery systems, they wanted to do things by labor, and this wasn't an option. So if the project was 1,000 hours and they were 900 hours into it, it would compute the revenue at 90%, regardless of if the project was maybe a $2 million project, and 1.8 million of the, or 1.6 million of the entire budget was spent in the first couple weeks because most of it was materials. They knew they weren't 90% done until the labor was at 90%. So that's what this allows you to do here. And if we look at this screen a little more widened out, you can see for this hospital where we're celebrating or announcing the opening of it, we can say, we can do the percent complete by task if we want, and we can direct those to different revenue accounts if we'd like. So those are some of the things that Dynamics SL is letting you do from a revenue recognition standpoint. And let's see here. The other thing I wanted to share while I was in here is the project maximum. So you could put a maximum at a task level, like the example that I'd given of, let's say for branding, we can only use so many hours. So the other nice thing that Dynamics SL allows you to do in the project area is it allows you to use letters. A lot of PMs aren't familiar with GL sub-account numbers or GL account numbers, and so there's an example here of where it's split out. They're showing 3,100, a GL revenue account, but then they're showing revenue, time, and materials in the account category, so that a PM can look at this and really tell where they are at with their budget when they see a budget versus actual report by project. But we can limit the maximum. We can say for branding, we can only put 80 hours into this, even though maybe to do a good job we need to do 100. We can only bill 80 for it. So that's nice because the PM who's maybe managing the draft invoice doesn't know when you've gone over those 80 hours, and so the software will limit that so that the customer doesn't have to find it and point it out to you. So the project amounts, the key piece here, as we talked about, for completed contract, this is where you would put the contract value, or it would actually just display the revenue budget when you change the revenue. So the EAC, or the estimated complete, is pulling the revenue budget for the completed contract, if you've selected to do it that way. And where you would select that would be in the project controller setup screen. So I'll show you that very quickly. And this type of revenue recognition would be for each project. We set up the project controller setup screen that way. So here, if we go to the project controller options but look at the revenue recognition piece, here we can say, so it's revenue recognition based on the contract value, in other words, the original budget, or the revenue budget, so that if all those change orders are reflected too. So if we got another 20% in change orders, we're looking at the whole project, not just the original contract value. So the other nice thing that Dynamics SL allows you to do is have multiple companies open. So for example, if we're looking at some revenue recognition that we wanted to do for the general ledger, sorry about that. The door was open, some noise was feeding in. If we look at the general ledger, we can pull out open the general ledger, and you can see that in the journal transactions, the data entry is done in a grid. So if I pull up journal entry, I could copy and paste this to and from Excel. Now, certain general ledger accounts require a project or a task, and some require that one is not entered. So this is not using a project, but what we can do is we can pull in a different project or a different journal entry. So what we can do is we can easily take this journal transaction and we can move it to Excel easily. And so what we could do is we could have multiple companies open, and we could take a journal entry from another company and just paste it right in, because we can have the journal entry screen of one company open at one time and the journal entry screen of a different company open at the same time. So we could dump that to Excel like this is done here for us with one click of a button. Or what we could do is we could go into another company. So we could grab a spreadsheet like this and paste it in for our revenue recognition computation. Sorry about that. Sometimes it's hard to tell if you're closing the whole thing or just a piece of it. So I want to get out of Excel. Now what we can do is this is the Contoso Entertainment Company. Those of you that work with Dynamics GP also are familiar with these companies. And what we can do is we can look at the main menu and we can say, there's this GC company, General Contracting Company, and that has really the revenue recognition journal entry that I wanted to emulate. So I can go into this screen without closing out of the journal entry screen for the other company and pull this in. And so here's my journal entry. And I could then have both open at the same time. This is maximized a little bit. And so I've got, I could have as many companies open as I want to grab the revenue recognition entry I liked or pull it in from a spreadsheet. So I believe we're running out of time. And I can't remember if I had another topic here. I thought I had a Word document. I'll bring it quickly just to make sure I covered all the items. And so we showed I did want to show the billing schedule last. So if we take a look at the billing schedule, I had that in the entertainment company. So this is nice because it allows you to set things up well ahead of time. And so if we look at the scheduled billings and revenue entry, I'm using this favorites for those of you that are used to Dynamics GP, which is very nice. It limits how many clicks you have to pull something up. So here's this schedule I created for this hospital. So see, I've got a billing schedule and a revenue recognition schedule. The billing schedule is going to bill a third, a third, and a third. But the revenue schedule is going to say, you know what, we really earn it 20%, 30%, and 50%. I'm basically using a salesperson to do a lot of the design work so that that person can stay connected and really flow out the design work. But the real work is done here and here. And I don't want to recognize most of the revenue until I finish, right? All the value is in completing the project, so I want to put most of the revenue recognition toward the end. So that was the last thing. I believe that consumes the time that we had here today. And so I wanted to thank you for your time. And Jason, was there anything else that you wanted to add?
No, thank you, Jack. No, nothing else I wanted to add except that I would like to remind folks that they can ask questions now if they have any, and you can enter them in the Q&A tab that you should see. Jack, you might want to just end sharing so the Q&A is a little more easily visible. Yeah, at this point, questions are open for our presenters. Jack, one thing people might be curious about, I think, in the in watching this is how they can get in touch with you. Do you want to maybe just share your email address one more time in case they do have follow-ups after the session here?
Sure. I'd be happy to answer questions. My email is jboyer, J-B-O-Y-E-R, at boyerassoc.com. And if it's a GP question, I'll work with Ron to see if he can help me.
All right, thanks. It doesn't look like we have any questions at this time, so maybe we will wrap things up. But the session is recorded, and if you want to come back and take another look, we'll keep you alerted when we've posted the recording. Thanks so much for attending today, and keep on the lookout for other sessions in our professional services series, as well as a full host of sessions coming up this fall. Thanks very much.
Thanks, Jason. Thanks, everyone. Bye now.